Good morning, everybody. It's Thursday, October 24th, 5:26 a.m. Central Time. December corn futures up 2 3/4 at 421 3/4. November soybeans up 8 cents at 10.05 and a half, back above $10 this morning. December Chicago wheat up 1 at 579 and a half. December Kansas City wheat up 3/4 of a cent at 586 and a quarter. December spring wheat is up 2 at 617 and a half. We've got some stories about the BRICS to lead off this morning.
So, the Biden administration is discouraging Brazil from joining China's infrastructure program. During the Bloomberg New Economy at B20 in São Paulo, Biden's top trade negotiator explained that Brazil needs to consider the risks of joining China's Belt and Road Initiative. Several Brazilian leaders believe the program could bring in new investments, while others assert that the partnership could potentially harm ties with the U.S. and the EU. According to Brazil's ag minister, the country should join the program to counter protectionist measures from the U.S. and the EU. The Biden administration is also evaluating the USMCA Free Trade Pact due to concerns over Chinese companies buying land in Mexico to build factories.
Please don't go, Brazil. We need you. We need China to buy soybeans from us, and we don't want Brazil getting too close. But the cat's already out of the bag there. I don't know how much of this. Well, there's a lot to this. It's more than just the grain trade and the soybean trade, but that's what we're concerned about. Let me show you two charts. These are the top 10 soybean exporters. Brazil is going to export 105 million metric tons of soybeans this year, the most of any country by a huge margin. Here's the top soybean importers. China is going to import 109 million metric tons of soybeans this year. That's the largest of any soybean importer by a tremendous margin. These two are a match made in heaven. Whether the BRICS are conspiring to eliminate the United States from a lot of different things, from the global grain trade, whether they want to get away from the dollar, whatever, the supply and demand and logistics factors, I think, are the bigger factors that I'm more concerned about. Make no mistake, if they have a drought in Brazil, China's still coming for U.S. soybeans. That's what they're going to do. But if they don't, it makes a lot more sense for China to buy soybeans from Brazil. And I think that's going to continue to happen whether or not the U.S. is successful in its pleas to keep Brazil out of this Belt and Road Initiative. So there's a lot of people who could explain this a little bit better than me. But as it relates to soybean exports in particular, which I think is the big item, it's more of a supply and demand thing, guys, than I think it's any sort of like, again, evil conspiracy to eliminate the U.S. from the global soybean trade. It just makes sense is what it is.
Russia has proposed establishing a BRICS grain exchange. At a summit in Russia, President Vladimir Putin informed the leaders of the BRICS nations, which include Brazil, Russia, India, China, and South Africa, that the exchange would protect trade against price volatility among the countries and with other nations in the global south. The exchange could eventually be used to trade other commodities such as gas, metals, and oil. The development of a new cross border payment system among the BRICS nations was also introduced. The system would bypass the dollar and make it easier for the countries to trade with each other. The BRICS account for 37% of the total global economic output.
The BRICS, of course, are Brazil, Russia, India, China, and South Africa. It seems like we hear a lot about China, Russia, and Brazil when it comes to the grain trade in particular. So same thing. I mean, are they making some efforts to get away from the dollar? Yeah, there's a lot of talk about that. I don't know that they've been hugely successful at that to this point. The big thing for me is that this is all happening. A lot of it's because of supply and demand that we're losing export share. Some of it's probably because of stuff like this. Maybe the BRICS are evil and conspiring against the United States. This brings up two big things for me. We need more domestic demand. Where the HE double hockey sticks is the 45Z guidance. Where is it? It's a failure of government that we don't have it. Yes, I understand the pipelines are a problem and that this eminent domain thing is a problem and that there's a lot of farmer opposition. I get it, but give us the guidance. Give us the guidance. We should have had this months ago. We've been begging for it. Where's the government? Secondly, why are U.S. taxpayers subsidizing imported and perhaps fraudulent U.S. Used cooking oil for biofuels? That's also, I believe, a failure of government. And you know what? If Trump gets into office, things could get dicey here for a second, because I think he could potentially address the used cooking oil matter. When he finds out about that, he's not going to like it. But at the same time, you could see a trade war started and maybe we force China to buy soybeans like we did last time around. I think that's kind of what happened in 2020 to some extent. But make no mistake, guys, we are becoming very quickly a residual supplier on the export market for soybeans. We're already there for wheat. We're corn is a lesser share of corn exports are a lesser share of the total demand pie for corn grown in the United States. But we need more domestic demand. That's the big point that I would drive home here, because I don't like relying on exports. I don't like relying on government for guidance and for policy either, but I like that rather than relying on China.
U.S. ethanol production reached the second highest level on record for this time of year last week. Weekly output of 1.08 million barrels per day was up 3.7% on the week and up 4.4% versus the same week last year. Ethanol stocks were pegged at 22.2 million barrels. The print was down slightly compared to the previous week, but up 5.3% compared to the same week last year. Implied gasoline demand was up 2.5% compared to the previous week, but down 1.2% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 4.3% compared to the same period last year.
This is very, very good. So marketing year to date, ethanol production is about 3% above the same pace last year. And USDA is actually projecting reduced corn demand via ethanol year over year. If you could maintain, and I don't know that we will, but if you could maintain a pace that is 3% above last year's pace, that would translate to roughly 185 million bushels of extra corn demand. I just like to see an extra 100 million. Let's take a little bit more than half of that. If we can just stay maybe say 2% above last year's pace, that would be very, very good. I also think on a related note, corn exports have been very strong. We're going to see a really good export sales number today. Should be 2 to 3 million metric tons current marketing year. USDA could be understating exports also. This could ultimately translate into a corn carryout that is not 1.999 billion bushels at the end of August next year. It could be closer to a 1.8, which is not bull market territory, but it's definitely positive relative to current projections, I would say.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's video with Brian Split?
Brian was on yesterday, did charts. He's fantastic as always. We did corn, soybeans, cattle, and silver, which has been interesting. We talked about first notice day, which for November soybeans is next Thursday. It's Halloween. And for December corn is, I believe, November 29th. There's a lot of things that come along with first notice day, especially in big crop years. Pete is too cool for school. We did a 51-minute uncut grain market and grain marketing mailbag with Pete Meyer on Tuesday. This is really fantastic stuff. Pete is super smart, super matter of fact, tells you what he thinks. Absolutely worth checking out. Today, our good friend Paul Neiffer will be on to discuss the Farm Act, with farmers up against tight margins and continuing to wait on a new farm bill. The Farm Assistance and Revenue Mitigation Act has been introduced to Congress to help offset some of that financial pressure. Somebody in the government wants to send you guys checks, and whether that's good or bad, we're going to discuss it and the details today. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Give that deal a shot this morning, guys. As I mentioned, it's an absolute piece of cake to sign up on your phone. It takes like 30 seconds. We do Apple Pay, Google Pay, and then everything. And once you sign up, is super easily accessible on your phone. The videos are one click to play. There's no messy login instructions or anything. Piece of cake. And Mackenzie, I forgot to mention at the top of the show, we hit 17,000 subscribers on YouTube yesterday.
I saw that. That's pretty exciting.
So when people ask me what I do for a living, I say, well, I do content. I do YouTube and podcasts and that sort of stuff. And they're like, oh, how many YouTube subscribers do you have? I'm like, well, we're closing in on 17,000. And they'll say like, oh, well, that's cute for you. Or, you know, like good luck with that, jerk, you know? And I'm like, no, this is actually my full-time job. So guys, please help me out so I don't embarrass myself in front of my friends and acquaintances, and subscribe to the channel, because it's embarrassing. Our numbers are so embarrassingly low. And I get it. Like, 0.1% of the population cares what corn prices do every day, but there's more than 17,000 of you out there. I know that much. So hit the subscribe button, guys.
Argentina has received much needed rainfall. According to the Rosario Grain Exchange, Argentina's main farming areas received between 1 and 3.5 inches of rain over the last day. The moisture comes at a critical time for the development of this season's wheat crop, which will be harvested in November. The exchange had cut its estimate for the crop to 19.5 million metric tons earlier this month due to drought. The rainfall will also enable farmers to resume corn and soybean planting, which has been delayed due to dry conditions. The exchange estimates this season's corn crop to range from 51 to 52 million metric tons, while the soybean crop is projected between 52 and 53 million metric tons.
Such a cute little channel we've got here, isn't it? 17,000 subscribers. Argentina is not a problem right now. They're projected to be the third. They will almost always be the third largest soybean producer in the world. Weather has turned around a little bit. This is a good map from our friends at Crop Profit. In the 7 days ending October 22nd, the soybean crop saw 80% of its normal rainfall. Corn crop saw 91% of its normal rainfall. The forecast is dryish for 5 or 6 days, and then you see some rains return about the 1st of November. So I'd say no major problem right now.
USDA reported a flurry of flash sales on Wednesday. U.S. exporters sold 5 million bushels of soybeans to China for delivery during the current marketing year. Exporters sold 4 million bushels of corn to unknown destinations for delivery during the current marketing year, and exporters sold 10 million bushels of soybeans to unknown destinations for delivery during the current marketing year.
Keep them coming. They're starting to add up. So when you see the export sales numbers today, corn sales that were already announced through flash sale for this week total like 1.8 million. So the number for current marketing year is going to be well above that. So we've definitely seen some improved export demand, especially for corn. Soybeans are seeing the frequency, but not the quantities that I would like to see. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 5 cents to 42 cents lower. Feeders really took a hit with losses ranging from 85 cents all the way down to 262. Box beef finally took a step back. Choice ended the day yesterday at 321.41. That was down 255. Select ended the day at 295.77. That was up 97 cents.
Outside markets, U.S. dollars off a little bit. Stocks are mixed. The S&P's up, but the Dow is down. Bonds are up. Gold's up $21. Crude oil is up $1.14, and the December WTI at 71.91. Have a great day, guys. We'll be back on Friday